Hello everyone, my name is Givmo Magujo and today we are going to look at the cash flow statement. Previously we looked at the three sections that are found on the cash flow statement. We looked at the operating activities, we looked at the investing activities, and lastly the financing activities. So this is the structure of an indirect cash flow statement. So today we are going to look at the cash flow statement items. Okay, so let's start with the operating activities section. But before we do that, I just want to talk a little bit about the cash flow statement. So the cash flow statement is used to measure the cash generation potential of the business. So it shows how much cash the business has generated or spent over a given period of time, right? So, and the operating activities section is a representation of how much cash the business is generated from the income statement or from the net income that the business is generated. And I believe that you were following on the tutorial that we did on the income statement, right? So here's the income statement, and here we can see that we got a net income of 8,000. And if we go up here, we'll see that the net income starts the cash flow statement. So this section here, the operating activities section, is just a representation of how much cash the business has generated from net income. Mind you that the income statement that we created it based on the accruals basis, whereby we would just record revenue regardless of whether we've received cash or not. So as you can see here, we have got the revenue figure here. So this revenue figure is comprised of cash sales and credit sales. The same applies to the cost of sales. This figure there constitutes of credit purchases and cash purchases. So now in the cash flow statement, we want to see, we want to remove that portion that is in revenue that we haven't received the cash for, right? And we also want to remove the portion of credit purchases from the cost of sales figure that we haven't paid for, right? So let's look at the operating activities items. So you must know that net income from the income statement start the cash flow statement, and here we have got depreciation, right? Mind you that in the income statement we expense the income statement with this amount of depreciation, but here now, since depreciation is a non-cash item, in the cash flow statement we add it back, right? And we've got deferred income taxes, and mostly deferred income taxes are as a result of the different methods of depreciation that are used. So it emanates from different accounting methods of depreciation. For example, mostly the formula that we use to derive the deferred income taxes figure is the formula accelerated depreciation minus straight line depreciation times tax rate, right? So let's look at the working capital changes, right? So here it gives us an overview of how the business is using its cash, like how it is collecting its cash from receivables, how it's paying its suppliers, and all that. So here we've got changes in accounts receivable. So it's showing that here in red that this is cash outflow, right? And why is that? So the cash flow here, it's showing us that accounts receivables are increasing, right? Which means there is an increase in the number of credit customers. So if the number of credit customers increases, and that means they are not paying cash when they are buying products or services from us. So that's why you are seeing that in red. It means that we are not getting we haven't yet collected cash for the services or goods that we have sold to our customers. Then we've got changes in inventory. Right, so you must understand that an increase in change in inventory, it means we are using cash to buy inventory, but a decrease in inventory is shown as a positive, which means that we have sold some inventory there. That's why you are seeing a positive figure. Then we've got changes in prepaid expenses, and an increase in prepaid expenses, it means that we've already paid for some services that we haven't used already from other businesses or suppliers. Right, so that shows that the cash outflow there. So, and then we look at the accounts payables. That's a positive figure. That means the business is not using its own cash to buy products from suppliers. So it's a form of financing whereby suppliers provide services or goods to us, and then they say, okay, it's fine, you can defer payment for now and you can pay later. Okay, so but now we've got changes in accrued expenses, which is showing as a cash outflow, which means we haven't paid for that, right? But it's an increase, and it's showing that that's a cash outflow. So basically, I think you've seen how it works. Now let's compute that. So let's just say equals, and then sum. Let's sum up this, right? And then here, let's sum up this as well. And then you can say plus, and that's 100%. So let's just do that and remove, let's just remove those zeros there. So on your keyboard, press Alt H9, Alt H9, Alt H9, just like that. So that's perfect. This is our net cash flow from operating activities. So this is cool, guys, and let's just underline this. Okay, so let's highlight that. So to highlight, press shift on your keyboard, hold down shift and press the right arrow until you get to the column E, and then release on your keyboard. We want to put a top border there. So to put a top border, press Alt H B then P. Let's do the same here, but here we want to, we just want to put a top border as well. So Alt HB then P. Right, so let's proceed to investing activities. So the investing activities section, it shows us what the company is doing in terms of fixed assets. Is it buying fixed assets that help the company grow or generate more revenue and all that? But here we are seeing that this company is investing in capex, which is property, plant and equipment, and obviously this is recorded as a cash outflow, which means the company is investing in property, plant and equipment, and it shows that the company is also sold property, plant and equipment. So if it is a sale, a disposal, then obviously we have to put that as a positive, and in some cases that figure might be negative, because sometimes a sale can be a profit or can be a loss. Okay, so let's just sum up that, right, and then let's proceed to the financing activity. So this is the section that shows us how the company is raising its cash and how it is using that cash, right? Here we are seeing that the company is issued, in other words, the company has sold more shares to investors, right? And that's also a form of capital raising. So that's why we see that as a positive. But at the same time, we are seeing that at some point the company bought back its shares, which is and we can see that the company used the cash to buy back its shares. And here we are seeing that the company also raised debt, that is raised capital in the form of debt, and obviously it's a positive, and the company at some point repaid its debt, and we're seeing that it's cash outflow, and the company also paid out dividends. So let's just compute that. Let's sum that, and we've got the effect of exchange rate. This is when now the company has been trying to translate its figures, into another currency. So now let's just compute the changes in cash and cash equivalents. So to compute that, we need to take that figure there from the operating activities section. We add the figure from the investing activities. We add the figure from financing activities, and then we add this as well. And there we have our changes in cash and cash equivalents. So thank you guys for watching, and I hope this has been useful to you. But before we end this tutorial, let's just freeze our row there, or freeze the panel, and let's just come here, and then let's press Alt W, then F, then we press F again. That will freeze these two top, that will freeze row 1 and row 2, such that even each time when we scroll down here, the date, the year that we are operating in remains visible. Okay, and let us also put a top border here, so we can say Alt HBP, and we can come down here and do the same Alt HBP, and basically we can do the same here. We can put a double border, so we can say Alt HB and then U there. So that's perfect, right? So this is the cash flow statement in summary, and I hope that this has been very useful to you. So thank you guys. Please don't forget to like our page, and also follow us on LinkedIn, Twitter, and Instagram. So thank you guys.